Hello everyone, welcome to my channel. In this video, we will see best Bank Nifty options day trading strategy. First of all, I will explain you the setup, and after that we will see some examples in the chart. Let's begin the video. We are going to make use of inside bar candlestick pattern, and for this particular strategy we are only going to use 5-minute chart. Inside bar is a two candlestick pattern, as you can see. This is a sizable bar which is also called as a precedent bar, and the next bar whose range is engulfed within this sizable bar is called as an inside bar. So first of all, I will explain you what this two candlestick pattern indicates. This indicates that there is a strong momentum or decent momentum going on. We are not concerned with the size of this precedent bar. After that, you see a small range candle, and whose entire range is contained within this sizable candle. This indicates that there is a contraction in the volatility and the previously established trend has taken a pause. Three things can happen. First one, you will see more such a consolidated bar. Second one, you will see breakout out of high of this inside bar. And third one is you might see breakout out of this low of this inside bar. Any one of this can happen. As I told you, we are going to find this particular candlestick pattern on 5-minute charts. So what we want is that once we find such pattern, we are going to buy CE or sell PE above high of this inside bar candle. Similarly, we are going to buy PE and sell CE below the low of this inside bar candle. I have laid down some rule for the formation of precedent bar and inside bar, which we will see later in the slide. So we were talking about rules which I have laid down for precedent bar and inside bar. So talking about stop loss for buying CE and selling PE should be low of inside bar, while stop loss for buying PE and selling CE should be high of inside bar. I hope you have understood. Target should be the next relevant level. We will talk about how to set target during examples, because we need a next relevant level that we can set our target to, which I cannot explain in this slide, for which we have to see example in the chart. Now we will see some rules for the formation of inside bar and preceding bar. I am making a correction. I was calling preceding bar as a precedent bar. So let's see rules. The first rule for the formation of preceding bar is that the range of preceding bar should be more than inside bar, and most important thing, volume should be more than that of inside bar as well, because it will denote that price was having a field day during formation of preceding bar. So talking about the rules for inside bar, the rules completely reverse here. The body and the range of inside bar should be smaller than that of preceding bar, and the most important thing here is that volume should be less than that of preceding bar, because what it will tell us that price was having a field day during 5-minute chart, which is also 5-minute candle here in this two candlestick pattern, which is called as preceding bar. But after that there is a contraction in the volatility which has made price stagnant, and after that there are three possibilities may arise, which we talked earlier in the video. Let's see one more rule, that is, we are not concerned about whether the previous trend is uptrend or downtrend. We are only concerned about finding inside bar candlestick pattern on 5-minute chart. That is our goal. I'm emphasizing this point again and again. We have to look this candle in isolation along with volumes. What is happening previously should not affect how we are going to trade this particular pattern. After this, I'm going to show you some examples, then you will get more clarity and confidence about how inside bar candlestick pattern pans out in a 5-minute chart. In front of you, you can see 5-minute chart of Bank Nifty. First of all, we will see these two candles. Though if we just look at the formation of candle, this conforms to the rules which I have laid down. That is, the size or the body of the preceding bar should be more than the body of the inside bar, and the entire body of inside bar should be contained within the preceding bar. But just look at volumes here. Volumes are more and they are expanding for inside bar as compared to preceding bar. This means that we will not trade this pattern as per rules which I have laid down, which we just saw. I will give you one more example of such a pattern. Here, just look at these two candles. They have all the rules and they are following. If we just look at formation of candle for inside bar as well as preceding bar. But if you look at corresponding volumes, volumes are expanding for inside bar as compared to preceding bar, and volumes for preceding bar is lower than inside bar. So similarly, as we saw previous example, we are not going to trade this one as well. One thing I forgot to tell you is that, for example, this is an inside bar candlestick pattern. The breakout should happen on the third candle itself. It should either breaks the high of the inside bar candle or breaks the low of the inside candle. If the breakout happens on the fourth candle, we are not going to trade, which means that when you place buy CE or sell PE order, you just have to wait for next 5 minutes after this inside bar candlestick pattern is formed. If you do not see price going either way, then you just have to cancel your order. As you can see right here, just pay attention to these two candles. This particular candlestick pattern conforms to our rules. The body of the preceding bar is more than the inside bar, as well as the volumes are expanding and they are more as compared to inside bar. But just look at third 5-minute candle. Here there was no breakout, but on the fourth candle you saw huge breakout. Just to keep things consistent, we are just going to trade this pattern. If you are experienced trader, then you can go for such pattern. If you are just beginner, then just follow third candle should break high and the low of the inside bar. Keep in your mind before trading this particular pattern. Pay attention to these two candles. They conform to all the rules which we have laid down. The size of preceding bar is more than that of inside bar. Also see corresponding volumes. Volumes for inside bar is lower than that of preceding bar. So what we can do is that we can set buy PE order at the low of this particular inside bar. As you can see here, our stop loss was never in danger. This particular rally did not even came close to hitting our stop loss. Mind you, this rally did not even reverse for a second. Talking about setting a target, what we can do is that we have to look at left hand side of the chart and we have to find cluster of candles, and then we have to join low or high. Here in case I can see there are a lot of candle and the high of those candle are at similar level. Draw a horizontal line matching the high of all this candle to the right hand side, and this should be our target. You have to do same thing for every single trade that you have to take and you are going to take using this pattern or using any other pattern, because what happens is that at this particular level there are chances that the trade or the previous momentum is going to reverse. Let's see one more example. Just look at these two candles. They conform to all the rules that we have laid down. Now what we can do is that if you have extremely large capital, you can sell CE below the low of inside bar, or if you do not have large capital, then you can buy PE. Talking about setting a target, similarly I told you in the previous example, just look at left hand side and draw a horizontal line connecting highs and low. As you can see, there was consolidation right here. I will show you. So this was a consolidation of candles along the same level, that is the high of the candle was at a particular level, and here the low of the candle was on the same level. So if we draw a horizontal line from left hand side to the right hand side, and this should be our target. This is as simple as you see on the screen. There is no hidden secret about it. I have told you everything. So this is where we have to close our position. As you can see, it was a smooth sailing. Once price hit our entry order and our trade got executed, there was no looking back. Within 15 minutes, we booked a decent profit. Look at these two candles right here. They conform to all the rules which we have laid down. Volumes and the formation of candles is as per the rules we just saw. So here, if you have extremely large capital, you can sell PE or you can buy CE. Talking about setting target, as I told you, just look at left hand side. Either you can join high or lows. See here, you can see lot of consolidation. Then just stretch out a line from left hand side to right hand side, and this should be our target. And incidentally, this is the place where you saw a consolidation, and after that there was a trend reversal. So that's why I always tell you that try to look at consolidation of candles at a particular level. That can be a place or a zone where either price goes up and start breaking that level with higher highs and extremely expanding volumes, or you can see drying up of volumes and then ultimately price will reverse. I hope you have understood all the examples I have given. If you have any doubt, please ask your question in the comment box. I will be more than happy to answer them. If you are not part of Telegram channel, you can find the link in the description box. Thank you for watching.